You've been visiting Vienna and all the important OPEC meetings for all these years. It is going to be quite a change not seeing Khalid al-Khali there, but a royal family oil minister now. How does that changes things really for the OPEC and for Saudi Arabia?
Well, good morning, Manisha. It really is. It's going to be a change, absolutely. You know, to see Khalid al-Khali there, the oil minister, used to get that smile, though he's only been there for a matter of, say 3 or 4 years, well short of what the previous incumbent was there for about 21 years. But yes, to see a half-brother of MBS there, it adds a different intrigue to the market. And I think what it also does is underpin the situation at the moment that OPEC really, and Saudis, where they're concerned, they need that $85 handle, Manisha, as far as balancing their budget. And of course, that leads into the next part of the journey, which is the Saudi Aramco IPO, which is touted to be released into Tokyo. So I think it's probably going to underpin, and it may look like a better process in the sense of who's in charge from an IPO perspective, and it has, I think, a little bit more horsepower.
Well, absolutely. That's how the situation really seems like. But Peter, also, when you look at the OPEC market share, that has come down from 35% in 2012 to 30% as what we saw in July 2019. So not only is OPEC losing its market share, it also is working at lower prices. I mean, as we were talking earlier, the Saudi Arabia needs crude oil prices above $80 per barrel at just around $60, and that too for the last 8 to 12 months now clearly does not work well.
Well, exactly right, and they want that high number. We all understand where, Saudi have played in this, and it's a long way up from what we used to see in the 80s versus now where, that was $18 a barrel if you put your mind back all those years ago to what we experience now. They need that stronger number. And Saudi Arabia's a changing of the guard in many ways. It's, in some ways, becoming far more liberal. And you've got the next part of it, of course. We didn't have that US shale all those years ago, and the development of the US shale is nothing short of breathtaking.
Right.
We've forecasted by the end of next year, Manisha, at about 13.5 million barrels a day by the US Department of Energy.
So, Peter, in the light of all of this, what's your sense on where are we headed in sense of prices? Because, of course, supplies is one area, and that also coming in from non-OPEC. And the other thing is the IMO 2020. The demand concerns are still high, even as the markets are hoping for stimulus coming in from global central banks. In light of all of this, how do you look at the crude prices performing from here on?
I think they'll probably hold at these sort of levels. You've also got to look at this from a geopolitical situation, and I'm not going to say that President Trump is going to ask for higher prices, but he's also got a very wonderful ally being Saudi Arabia, and possibly over the short run you might see prices edge up a little bit higher from here. There are many moving parts when you've got an IPO the size of this, the largest in history. It would certainly, and I'm not being a skeptic in any fashion or form, but wouldn't it be interesting if prices edge higher over the European winter period, and they get edge up a couple more dollars, which in turn gives that IPO more value, and it might be an easier pill to swallow from an investment standpoint.